of YieldLab's DeFi AMA. Previously, I've just been running this from my from like my Twitter account and in the Neutron Discord. But now we're gonna start it up weekly as a branded DeFi class with YieldLab. And this will be the first ever where we're going to have a guest. And so I'm pretty excited to introduce you guys to Calibi, who is a member of Ophir DAO. And he's going to give us a demo of Pryzm. And then after that, we're going to jump back into Bitcoin Summer and some of the DeFi opportunities there. So Calibi, why don't you introduce yourself and we can get started.
Hello all. As Integrated Dino said, Calabi, and I'm kind of head of operations over at Ophir DAO. We're kind of a treasury DAO based out of Cosmos. We built a redemption contract, makes our token redeemable for users pro rata share of our treasury. And a couple months ago, we decided to kind of push into the Pryzm realm and start playing the Photon campaigns. And through that, I kind of decided, like, oh, I need to figure out what's going on here since I'm kind of managing the funds. I need to know what's happening. Otherwise, can't really make any opportunities or move on anything. So yeah, that's just a little bit about like Ophir DAO and what we're doing. So yeah.
That's awesome, man. So yeah, I mean, this class is all, or this every week we talk about DeFi opportunities across chain and Web3. And so, I was excited when you reached out at a possibility of teaching some people about how to use Pryzm. It can be a little overwhelming for someone who's just opening the UI for the first time, but I think the idea of yield splitting and having principal tokens and yield tokens is really, starting to be a core primitive or a use for DeFi in Web3. And so I think it's very important that everyone learns how to use this, how to think about it, how to identify opportunities. And so no better than to have someone run through an app like Pryzm so we can all learn together.
Absolutely. Yeah, I think I stayed away for a couple months because I was like, I don't get this at all. But it's applicable to learn because I mean there is a appetite for this kind of stuff. If you look at Pendle, very successful cross-chain yield splitting tokenization platform, and they're more contract based, but multi-billion-dollar market cap, lots of volume, lots of yield trading happening there. So there's appetite for it. So learning it here is applicable to other markets. So it's not just Pryzm. And I think it's a worthwhile skill for DAOs, validators, and users, especially with the onboarding of RWAs and yield-bearing assets. And then I would assume at some point stocks with their dividends, because that would apply to this at some point in time. So it's worth getting to know. And there's different tiers. You can choose you can choose how much you want to learn. And there's opportunities for everyone from the novice all the way to the most advanced users. Though I think it's just a little bit, I think they do a good job of like showcasing something that is just inherently complex, but there's still, I think, some work to be done in terms of like showcasing the opportunities to people who may not have the know-how or know exactly where to look. So yeah, I think I've spent some time kind of a lot of manual work and then just figuring it out, the process. And, I've kind of figured out a flow for like identifying these opportunities, and we'll kind of get into some of that today.
Nice, that's awesome. Yeah, yeah. I think what people want to see is exactly what you said. Like, show me how to identify an opportunity and familiarize myself with the UI, so then I can go and do that on my own. Or hopefully they are intrigued by what you show them and me, and they'll come back next week, or they'll come back to read some more maybe of your guides if you have posted on X, or read the documentation that I know you sent around. And so if you don't have access to those slides yet, then we'll try and share that link around. He wrote a very nice guide for people to learn more about Pryzm itself.
So you want to just hop into it? Should I share my screen and hop into it?
Let's do it.
All right, let's do it.
Oh, actually, before you start, let me just say one thing, which is every week at the end of the live stream, I always mint a Galactic Quark on Superbolt, which is the NFT marketplace on Neutron. And we raffle off this newly minted NFT to anyone in the audience who has asked a good question. So this is supposed to be an AMA. People are supposed to be interacting, asking questions, and that is how you learn the best that you possibly can, is by staying engaged and asking questions. And so we're here to help you guide through DeFi. It can be complex at times, and so we're here to help make that process easier for learning, identifying, researching, and just doing your due diligence on research. And so ask a good question. We'll keep track of who's here and who's asking questions, and then we'll do a little spin of names after the session is over, and we'll raffle it off.
All righty.
Floor is yours.
And yeah, if y'all on your socials, spread the word, post, retweet, all the good things. And once again, Fluffy, YieldLab, thank you for having us. Let's hop on in. So if you do have the slides, there's some stuff I'm not going to really go over, just kind of get you oriented to the UI. I'm going to assume people kind of know their way around, so I'm not going to go too much into that. I've set up a little demo account here with some of the assets that are a little bit more liquid on Pryzm. And I think just to start, there are a couple things that I did want to go into. Number one, I work with Ophir DAO. We have a referral code. You don't know, no obligation to do so, but if you decide to use Pryzm and you want to set us as your referrer, please do so. Helps us out, helps you out. I help make this content, and if you find it useful, we'd really appreciate it. Let's see here. So I'm just going to hop into just a little primer. I think where a lot of people get stuck initially is just the maturities, refracting, merging, and the P and Y derivatives. So we're just going to take a quick second to just understand what those are and how you go about getting them. So with refraction, you have a yield-bearing asset of which Pryzm has their own liquid staking token series. They're C assets, of which there's Atom, there's TIA, and there's a handful of others. And they've also brought external assets such as NBTC, NUSDC, NUSDT, and USDY from Noble, and then the N series is from Neptune, and those are deposit receipts on a money market. So all those assets can be refracted. So what does that mean? So essentially, when one refracts, we are equally splitting what is the principal side and the yield side of that deposit. So if it's Atom, the P represents my principal amount, and the Y represents my ability to claim within that given maturity the underlying yield of that asset. And what really makes it interesting is that yield is not guaranteed because the yield is variable. It can go up and it can go down. And today we're going to focus more on refraction and not necessarily just trading in. That gets into like other strategies and needing a little bit more knowledge in terms of like staking dynamics. But this is kind of the first stop. You can liquid stake a token or bring in these external assets and refract it into any maturity that you would like. And the maturities are usually on a quarterly basis. They're still working on the cadence of delivering those. And when they're minted 1-to-1. So for every P, there's a Y. And when you want to come back on the other side, and when you want to merge it, here we go, you have to bring those same amount back in to merge into your underlying C asset or liquid staking token. And then I just wrote a little bit about the P and Y basics here. With P, you're getting essentially a fixed yield. You're taking less risk overall, and there's going to be less volatility. There can still be volatility, but overall, you're buying at a fixed yield. You know what you're getting when you purchase it for the most part. The market can change a little bit, but overall, if I'm buying at a 10% discount, I'm going to earn that 10% all the way to maturity, where I can redeem my P token 1-to-1 to the underlying asset. And I think this is another point where people can get confused, and I got confused as well. Let's say D atom. You're not getting one D atom at the end. You're getting one atom's worth of D atom. So just make sure that, oh yeah, I can go full screen. Full screen. There we go. I don't know if it will do it on the, yeah, I don't know if it'll do it. Someone asked me to go full screen. You should have the slides. If you don't, we can post them in there. I'll kind of bounce in a little bit so you can see this a little better. So that's nice, a little bit about white PTs. There's also a strong relationship between the underlying liquid staking token or C asset to P. There's a strong relationship there. And then with Ys, like I said, it represents your claim on the yield of the underlying asset. So you can stake it and you can claim those rewards on a daily basis or whatever cadence you'd like. And at the end of maturity, those Y tokens for any maturity or any asset trend towards zero, as there is no more yield to be claimed. Now, the thing is with Ys, you take on, especially if you're trading into them and not refracting into them, you're taking on more volatility, a little bit more risk, but you are possibly getting a little bit more reward. And that gets into having to know if that gets into identifying opportunities. And we'll kind of get into that. Let me see if I missed anything there. And one thing to note is the yield for Ys are paid in the underlying liquid staking token or external asset like in USDC. So that's something it's not going to be paid in the base token. So that's something to be aware of. All right, I'm going to switch over to Pryzm. If y'all have the sheet, we're going to go to strategy 1. I'm calling it yield maximization and arbitrage. This is a very mostly simple strategy. I think it's accessible to most, and it's for the most part, what it's trying to do, the goal of it is to beat the staking APY of cAtom, because that's the baseline. Like, okay, because the safest thing you could do for the most part on Pryzm is you just liquid stake a token, right? And then it's auto compounding. You can't do anything with the yield. You're just going to hold it, and you're getting 22%, roughly. So can we beat that? And
Yeah, I mean, I
would
think that's
say,
an excellent starting point. Like you said, like first we need to pick what asset do we want to hold, like which asset do we want exposure to, and then after that, okay, what is the baseline hurdle rate APR? Like what is the absolute minimum APR you can get by holding that asset? Now that we've established we want to hold that asset, what's the easiest and most secure, most sustainable place we can earn that? With something like Atom, yeah, that baseline would be just the regular staking APR. So
yep.
we need to beat that, and let's see how to do it.
And is the risk worth it, right? And so this is a low risk way. Like you're not going to make massive gains, but I feel like you could outperform 4 to 5, or maybe even 8% on the APY, and that depends on a couple different factors. So number one, I have our test wallet here. I've got just one Atom. The first thing we want to check is, and I'm going to show you how to find all this information, but I may be checking a sheet, and I can share a little bit about that later on, maybe in the show or more in posts. What we want to know first is it better to buy cAtom off the open market, or should we just liquid stake and redeem? So number one place to go for that is you're going to want to go to tokens. Tokens, you can get a pretty good idea of most tokens. You can search, you can filter. I'm going to look up cAtom. Go here, and we can see, if we go down here, we can see a couple cool things that we want to know. This is right here is the current price in underlying terms, 1.2. I wish they had a couple more decimals there because it's worth knowing, but so they're rounding up or rounding down, and you can mint one cAtom for 1.25. So what I already noticed here is that there's a fairly big deviation. 1.2 to 1.25, we're talking about 3% arbitrage here. And I think they word this a little strangely. I think they're saying if you minted, you would get a little less. So, and I can confirm that. So 3.6, and I'm just going to confirm it here. Yeah, I got 3.48 on my sheet. So what I'm seeing is if we could get 3.48% more gross, not minus fees, if we just purchased off the open market. But let's double check. So let's go into, you can go to turbo staking. You have a couple options here. Turbo liquid staking is you have the base asset Atom, and it liquid stakes and refracts. Boom, one step. Or you can choose to just do it. Hey, I just want to mint the LST. That's all I want to do. And you can also slow unstake here too. And there's a cool option for instant unstake. I don't think we'll get into it today, but it's something that could be explored later on. So let's see what one Atom would get us in the December 31st, 2025 maturity. So one Atom, as you would expect, would be roughly 0.99, right at one Atom at maturity. And you get the equivalent amount. Like I said, they're minted 1-to-1. So let's just say that's what we're supposed to be getting. So, all right. So that's what we could get if we just went straight into it. So let's go to the swap page, put one atom, and we're going to go to C atom. We're going to do this. We're going to say, all right, one C atom, what does that get us? Okay, 0.822761. All right, what does that get us in terms of the derivatives we could mint? So we go back to turbo staking. We go here, we type C atom, we do this. Boom. Oh, wait a minute. We got 3% more. So we're going to want to do that. This is a good deal. 3%. Like, granted, if you took the unbonding time, you could calc the APY on that. Right now, that's 81%. If I were to take this as a pure arbitrage play, but for right now, we're going to be dialing into our strategy. And I'm going to stop there. John, you got any questions or anything you want to add in on that?
Yeah, I mean, I think what you just showed is for people that, am I echoing? I think for people that maybe are not familiar with this UI, it's very similar to either just buying a liquid stake token off the market or going and minting your own liquid stake token. And the reason it looks a little different with different names, but that's essentially the same thing you're doing. Like, is it better to just mint a let's say, for example, D atom by drop, or go and buy D atom off the market? And yeah, usually there's some kind of a discount for going and swapping into the liquid stake token, which is exactly what we're seeing here, that there's like a 3% discount for buying C atom off the market. Wait, I can't hear you.
Oh, we're having a salmon shirt camaraderie going on here, so that's good. If you got a salmon shirt, please go get it and support our brethren here. So we clearly have already defined, number one, we're getting more atom. And I do want to just briefly go back. None of this is financial advice. This is an advocacy for atom, long, short. It's your preference. This just happens to be one of the more liquid markets. So that's kind of what we're going with right now. So what we've decided is we're going to swap in. And on this strategy, what I said is that we were going to use 75% of our funds to mint C atom. And then we're going to use the other 25% to put in a pulse trade to capture more arbitrage opportunities. And I'll get into all that in a little bit. So let's make our trade. And it's nice when you have all of this available. Like, you don't have to go to multiple venues, right? If the liquidity is there to make the execution possible, oh man, now I got to go from, I got my ST atom or D atom, and now I got to go from neutron. If there's maybe there's a better deal on osmosis, and you're trying to find the best venue. And not saying Pryzm is the best venue. Sometimes there are better venues, but there can be fairly good execution specifically within atom. So let's go here. We're going to do 75%. We're going to get our 0.61 C atom, and we're going to swap. Another great thing about Pryzm is gas can be paid in any token. Whatever you want to use, you can use. And I think that's, number one, friction-wise, like, it really reduces friction, I think, for the user experience.
Yeah, that's great.
Like, it's whatever you want it to be. So if you want to, like, hey, I only want to pay in stables, you can do that. And it's pretty much any base asset that's on Pryzm. So I think that's pretty cool. All right, so we're going to do that. And when that swap is complete, we are going to head back to the turbo staking. We're going to find our C atom. We're going to mint for, I guess we can kind of get into this, choosing what maturity. It's kind of a time preference. Right now there's December 25th or 31st, December 25, and now there's a new June maturity. And then the next one is December 26th or December 2026. For me, I don't necessarily want to take on that duration risk. So I'm going to go with a shorter dated maturity, because you can go over to yields and discounts and you can get an idea of what you could get. And what you can do here is, when you get here, and this tends to be one of the more confusing places, and we're going to circle back to it. I'm going to filter for atom. You can get an idea of the annualized returns. But some people prefer to look at the ROI. So you can toggle the ROI on, and you can see, like, okay, what am I actually getting from this maturity? And I can see here, like, minus fees, we're 8.9%. That's not bad. Annualized 50%. So it's beating the APY already by holding that. So, okay, that sounds like a pretty good deal. And then as you can see here, this is negative. So why is that? What's that saying is if you were to purchase YAtom, not refract, if you were to purchase off the market, you are purchasing it more than the yield you would receive by the end of maturity. So you're already at a loss if you were to purchase this right now. And with this particular strategy, we're just refracting in. We're not trying to we're not saying, hey, I want to expose myself more to Pryzm, more to principal or to yield. I want to expose equally, and I want to maximize the yield. And that's why, it's not as big of a reward, but you can still kind of beat the APY. So that's just to kind of give you a little context. And we're going to end up back here. And if I'm talking like I'm hyped up on some drugs, I'm not. I just talk really fast, and I can definitely slow down if we need to. So we're going to go back to turbo staking, and we've done that. And we're going to turbo stake YieldLab, and we're going to go ahead and do the nearest term maturity, and we're going to refract. Refresh the page. Good old reboot always fixes things. Let's try it again. YieldLab X. There we go. And it does have a tendency to do this on Kepler. Always watch out. I say remember my choice. It rarely remembers my choice. So just something I've noticed. I think that's more of a Kepler issue than it is like a Pryzm related thing. It looks like Lewin's got a question. What's he got there?
Lewin is asking, what are the differences between the different tiers of Pryzm and why do they have different APYs?
Yep, that's a good question. And what are Calabi's drug of choice? Magic mushrooms, but only 1 to 2 times a year, never more. They are a tool. They can be fun, but they're also a tool. Don't break the tools. Yeah, let's take a quick second. Let's just kind of hop back over there and what that means. Yields and discounts. If you get into this, yields and discounts is going to be a page you need to get familiar with because it's kind of where all the information is in terms of spotting opportunities. I kind of like toggling back and forth between ROI and APY. I also didn't know this for quite some time. Customize and just basically turn all these on because it's very useful. What they are is it will show you the LP, the internal APR on the LP, and the underlying APY. And it's just good to be able to see all that at a glance. And here, I'm going to maximize so we can see more of this. So what you'll notice is it seems like short-dated maturities or nearer term, their APY, which we're currently on, is much higher. And what that's telling us is that when you annualize these returns, there's only 77 days left to get 8% or 9%. So that annualizes out to 50%. And for 258 days, you'll get what is almost 14%, 15%. So you're getting, a little less than half. And then the amount of days is not necessarily, that's more than half. That's like 100, yeah, that's quite a bit, like 180 days. So the ROIs tend to be bigger on longer term maturities, and the APY is inverse. Usually the APY is higher for shorter dated terms. Now this is an aspect where you can identify opportunities. If the APY of a longer dated maturity is higher or anywhere close to a shorter dated maturity, you're going to want to look at that because they shouldn't be, right? You could imagine it like a curve. If the spread between these is tighter in terms of an APY, you may want to expose yourself to that longer dated maturity, but that would depend on your risk tolerance, how do you feel about the price of Atom and on that duration. So that's just kind of one aspect you can look at. But I go between APY and ROI just to kind of see. I tend to go with loading up on shorter dated terms. And then if I can find a good deal on longer ones as we're moving through maturity, I start stocking up on those. But like for right now, I'm probably going to leave this one be for the time being. So that's just a quick primer on that. Let's go back over here. So okay, so now we refracted. This is the portfolio page. You can see we have our Y atom here. This is based off using 75% of the funds. And then we have our P atom. So there's a couple things you could now do with this strategy. Y atom, if you really wanted to, you could just, it's overpriced right now. So you could say, hey, I'm just going to sell it. But let's say for now, I'm just going to.
Wait, how do you know it's overpriced?
So that's on yields and discounts. If it's a negative yield, Adam, here we go. Anytime this is negative, at the current market context, it is saying that this, if you paid this amount right now, you'd be getting 42% less yield. Is kind of what, or sorry, you would be receiving on an annualized basis 42% less. You could see your return. You'd be losing 11%. Now, granted, this could change if the APY went up, which I wouldn't expect that it would. I would think that it would be trending downward. So that's why I personally wouldn't buy Y atom at this moment in time. I would refract into it, or if I had bought it lower, I'd be selling it possibly. Does that make sense?
Since the P atom APY is higher than the staking rate, that means that the P assets are undervalued right now.
Yeah, it can mean that. So like that's something I've been working on, is calculating fair values, because that's one thing they don't really give you in Pryzm. And for my calculations, like this is like underpriced in relation to the amount of time that has passed in the security or in the maturity. And I'll just quickly go over there. I don't want to get too off the rails. We can see. So per my math, if we were at this point in time in the maturity and you were going to hold to redemption, it should be about 0.94. So that's a spread of about 3 cents or 3% roughly between the market price and what the fair price should be if you were looking to hold it to redemption. So to me, this is a good buy. If you were looking to trade into it, this would be a good buy. And that kind of works into our strategy, because like, hey, this is currently at a good buy. So what we want to do now is we want, Y atom is overpriced, but it's not crazy overpriced. It's kind of like almost at par, maybe you could do better. So we're going to hold on to it and we're going to stake it because we want that C atom. So we're going to stake this, and everything can be staked here. I don't know why it keeps on doing that. One thing I wish they did have is like if you have a bunch of Ys, you got to stake them individually. They really should have like a select all button so you can just stake them all at once. There we go.
Can you explain what it means by staking it? Is it locked somewhere? Is it going to earn more yield?
So right now, if you're just holding it, it represents your claim or your ability to claim the yield. But if you're not staking it, you're not earning that reward, if that makes sense. It's kind of like having it unstaked. Let's see if this goes through. I don't know why it keeps on saying that. Let's try it again. There we go. And I'll show you where it ends up so you can play around with that. There we go, staking it. So if you were holding this and you're like, hey, I expect that Y atom is going to become even more and more overpriced, maybe you want to leave it in your wallet, or you want to set up a pulse trade like to a certain level. And we haven't gotten there yet, but I'll be showing that in a little bit. You could be setting basically limit orders for when you want to sell out of it, but you're foregoing the yield by not staking. And this is one place where I think that either a protocol could come in or they could do it. It'd be sweet if the protocol was smart enough to be like, your limit order or your certain price has been set, pull out of staking and sell. That would be sick. Currently, you can't do that. You have to manually go in and do that. But here on the staking tab in portfolio, this is where all your LPs, Alliance module stuff, which they don't have integrated yet, anything staked is going to be on this staking tab. And this is where you can manage all those. And so you can see unstake here, and then your rewards will show up here. I think it's every so couple hours they'll show up and they'll update. And it's persistent, so you'll see it on any, regardless of the tab you're in. So that's one part of the strategy. Now, what do you do with your P atom? There's a couple things you could do. You could just leave it in your wallet and hey, I'm holding the redemption. That's what I'm here to do. I'm just gonna do that. And that's well and good. If you want to maximize for return and get a little bit more, or maybe you're really interested in holding some Pryzm or earning some, you could either in totality or partially deposit this to liquidity. And because if you go to the rewards page, you can see the campaigns. We're on season 4. They call it their Photon campaign. It's kind of a point-based campaign where the points become a claim on the on Pryzm that they've allotted towards the campaign. And you can see by filtering for atom, what you can get for providing liquidity. I don't want to go to too many of the details there because we could really get down into the weeds. But that's kind of an idea of like, okay, well, if I don't want my P atom just, passively sitting around, it's earning yield, but it's not claimable yield, right? Because you don't get anything until you redeem. So you can put it to work in liquidity if you felt like that with your risk tolerance. And to do that, you would just go to pools. Usually it's here, but you can also type in atom. You can see all the pools here. There's a couple different ones. I prefer the yield pool. And what that is it's basically all your P atoms for all available maturities and C atom. And you'd probably be asking, where's the Y atom? They have an interesting AMM module where basically when you are swapping in and out of it, and specifically to Y tokens, there's flash loans happening in the background because the entire module holds all the tokens all together. And so that's how your refraction does a flash loan, pays itself off, and that's how you get the Ys. So that's why there's only P and C tokens in here. And you'll probably see this. This has been a point of confusion for even myself a little bit. This is an internal APR, more of a metric to see how it relates to the maturities and discounts. You aren't necessarily getting that per se. The LP is going up in price steadily over time, but this is more of a relationship to what are the discounts of the P atoms that are available in the pool. And I know that's kind of confusing. This is probably a little bit of an area where I'm still trying to figure out the opportunities of when to swap in and swap out. But typically as price rises, the APR falls. And then the inverse is true. As the price falls, the APR rises. And so what you'll see sometimes is like when there's new maturities coming out, people will be swapping out of their LPs to get like these cheaper P atoms or cheaper Y atoms. And I can kind of stop there. Does that make sense? This APR is, I think, sometimes a little bit confusing for some people. For me too.
Because from what I understand, we're holding a discounted P token right now. So just holding that is earning us some amount of APR because it's approaching maturity. And so how do we know if depositing it into this LP will be better or worse than just holding it?
I think coupled with the fact that depending on your outlook for Pryzm, and that LPers get the highest share of photons, it would if you had that outlook like, hey, I believe in Pryzm long term, I don't want to necessarily buy it, but I want through my engagement with the protocol earn some Pryzm, I think this could be worthwhile. I think they could do a better job of showcasing when this is a good time to get in or out, or like the overall average APR of the pool. You can see it also has swap fees of 3.81%, 3.818%, which you are actually getting that.
Yeah, it seems like that's by depositing, it's almost like you're getting a 3% boost on the APR.
Exactly, because you're
It's a
still going to
very
get that yield, and you'd want to make sure you'd still want to look at the prices of it. So, and a place you can do that is either you could go to the tokens page and find this pool, or you can go to yields and discounts. You filter for Atom, and they have this little chart button here, and I'm going to toggle all these off, and I'm going to look at the price, and you can kind of go out. Let's go to max. And obviously, some of this is clearly due to the price action of Atom. But, looking at this, you might say like, I consider this to be a decent entry into the LP. I'm gonna enter in here and, see what happens. And then, so you're getting the photons, you're getting the swap fees. So you're kind of getting the fees and the additional APR while otherwise your P Atom would just be sitting there. You'd be getting your 9%. The thing is, like, there's no yield on a daily basis to claim. You only can claim it at maturity. So that's why sometimes some people would say, like, okay, I would rather put it to work than it just idly sitting by. But you could also, play both sides. Hey, I'm just going to do 50% of it, and the rest I just want to keep it as is. So that's, a couple things you could do with your P atoms. And eventually there would be a money market. So I think eventually the idea is like you could bring your P atom and use it to borrow against, would be my understanding. I don't have a whole lot of details on what they plan to offer there, but that would make sense to me.
When you withdraw the P atom from the pool, like let's say, we did the refracting, we're staking our Y atom, earning yield on that, and then we are taking our P atom, depositing into the LP. How do we withdraw it, and what tokens do we get when we withdraw from the LP?
Yeah, good question. So if you wanted to go into the Atom yield pool, in which there are a couple others, this is the one I prefer to go into. There's a couple of different ways to join. If you want to have zero price impact, C Atom is the way to go, because essentially it refracts the necessary P's and the necessary weights that it needs. And you can get into the pool with like no fees, no swap fees. And you'll also get the corresponding Y's, because essentially it's refracting this C Atom and entering into the pool with the C atom and the P's, and you get the other side of the Y's. So that's a one-stop shop. Go in like at the most advantageous weight, or swapping it with like minimal fees. Now you can also do pool tokens, and you can do them one-sided. So you could do this, and you could see very minimal impact here. Obviously, due to size, you could see if it went up higher, what that would be. It might not show it to me since I don't have it, but minimal price impact. So you would swap into this LP by providing just this one-sided part of the asset into the pool. And then what you would receive is the yield pool LP token, which if you wanted to, then you could add liquidity, because this LP, this one here, is tradable with the underlying asset. So it can be used to, you could enter another pool if you wanted to. And that is the Atom base pool. And essentially that's the LP here that we just looked at, the Atom yield LP, and the base asset Atom. So if you wanted exposure to both, you could then take that LP and you could split it 50-50, and you'd have a little bit in the yield pool and a little bit in the base pool. And this essentially just makes the LP token tradable to the outside. Like you could trade it for any other asset, because Atom yield LP to Atom to USDC basically connects it to any other asset. But that's getting into a whole nother can of worms in terms of like doing cross asset trading, because that starts to get into a level of risk that I think most people probably wouldn't be comfortable with. But those are the primary pools and like what they'll be represented by. Does that answer that?
And And then if you withdraw from that pool, your P token, do you get a mix of all the different maturities?
Yes. So if you when you do withdraw, I don't know if I have any here. So you would get, so when you swap into that, what you had bought with when you refracted will then be split up. So that may be not something you want. So you only do like 5-10% of it because you're like, what I care about is the December. I only care about the short dated maturity. I don't want to be split up in all these ways. And this is how it comes. Like you can't decide like, hey, I only want this. It gives you an equal amount according to the weight. So if you're like, okay, I want a little bit of Pryzm, but I don't want to lose all my discount. Or you're not necessarily losing because you're getting the discount on these other ones, but I really want to be more opened or exposed to the nearest term maturity. Then either don't do it, or do it in maybe 10 or 20% of like your total amount. So you don't end up with all these different tokens that you didn't really necessarily want at the beginning. So that's kind of a little bit about like some of the LPs. I think there's still a little bit that I have to understand in terms of like finding opportunities there, and I'm kind of coming to some conclusions. I try to balance mine because I like having the exposure for the photon campaigns and earning points so I can earn Pryzm. So from my perspective, it seems worth it, but it may not be to everyone's preference. So now what do we do with the C atom? On this, we're probably not going to get to any rewards because we're not going to be here long enough. But what you would want to do to maximize, I would be earning C atom on this Y atom while I have it staked. So what you'd want to do is, daily, you'd want to come in, you'd want to go to yields and discounts, and you'd want to go to atom. You want to check out what this is. You can show your art, you can toggle, like, okay, it still looks like a good deal. And you want to use that C atom. You can either use it to mint or refract more of the P and the Y, or you can say, you know what? I want to maximize my yield and use it to buy discounted atom. So now you're taking your yield and you're going to get 8.96% currently more at maturity. So you're maximizing your yield by taking it and then purchasing the discounted P. There's a couple things to take into account though. When you sell a C for a P, the arbitrage or the DPEG does come into play, and fees. Typically C to Ps have pretty good execution, but you can kind of take a look at it here. So this is one thing you'd want to come in and how much is it depegged, or is it pretty tight? If it's pretty tight, I'm going to probably want to swap into this. Right now it's at 3% of a discount to the exchange rate. So you're losing 3% when you do it. So today would be a day where you're like, you know what? I can check this out, but I know I'm probably losing 3% plus the fees. Today, I'm going to go in and I'm going to slow unbond. I'm going to slow unbond all my C atom rewards for today. So you go to liquid unstake, C atom, and you would do that here. And the idea here is like what I would do is take a certain ratio. If there's too much arbitrage, you do say if it's more than 3%, I'm going to unstake it all. Or if it's 3% or less, I'm going to, do a little bit of a ratio, like 50-50. And the idea here is like, if you can daily unbond, you're going to have a slow trickle over the maturity of like constant atom coming in, which you can then use to pick up deals. Maybe P atom is looking good. Maybe Y atom is looking good. Maybe you just want to, you play the arbitrage again on the other side when you get the atom, like, hey, there's another arbitrage opportunity. So it's good to remain liquid and have some like steady liquid supply coming in so you can play those opportunities. Now, if it was such that the peg was pretty tight within 1%, that's pretty good. Like you would want to on that day come in, C atom, and sell it for P atom December 25, because at 1% you're getting kind of a minus the arbitrage, right at 8% yield or return on that yield. So you've added 8% more to the yield you've already earned. So that's kind of like that strategy in a nutshell, and all the kind of like pitfalls to watch out for. And along the way, you could say, man, Atom is way overpriced and it's close to the end. I'm just going to sell it for either that maturity we're in, or you could roll down into like to the next maturity. So you could sell the Y for, the next upcoming Atom maturity, or you could just hold it till the end and claim the available amount of yield. And then at the end, you would have all the P Atom you've accrued, and you would come to portfolio, and you would redeem here. It's not here now, but when it comes up, there's a redeem button. And the one thing to note, it redeems to C Atom. And this is one thing that I think Pryzm, I think that they could either slightly alter the math. And this is something I'm kind of working on. These APYs do not include the unbond time. So what I'm saying is when you redeem and you have C Atom, you can sell at market. And if, let's say, the arbitrage, and that's usually what happens, you at the end of maturity, you find like a pretty big depeg happens because people just sell out of it. But if you wanted to get the maximum amount of that discount which you originally purchased, you would have to unbond, which would technically lower this APY because you'd be tacking on 21 days. And I think that's one thing that they don't do a good job of showing. There's different ways to look at it, but that's just one thing to note. So that's kind of the strategy in a nutshell. I'm sure we've got some questions. I've kind of put the camera stuff side away, so if there's more, I'm happy to answer.
I have a question.
Yep.
So how do I know, is it better to just buy, like at the beginning of what you did, you bought discounted C Atom to start the, and then refract it? How do I know if it's better to just buy the discounted C Atom and then immediately unbond it, or buy the discounted C Atom and then refract it and then, do the strategies with the Y Atom and the P Atom? Like, for example, collecting the Y Atom yield, or also maybe potentially staking the P Atom in a liquidity pool, other than earning photons, let's say. What is the strategy of doing that?
So that would depend on the user preference and their outlook to the end of this maturity on Atom. If your outlook is bearish, I would say you would just take the arbitrage, and because you don't want the exposure, you don't want the duration risk, right? You're like, I just want out. I want to get the full arbitrage, and then maybe you want to sell that to USDC, and you're willing to take on 21 days of duration risk, but you're not willing to take on more than 3 times that. So really what it comes down to is, are you bearish or bullish the asset? And the user needs to understand like what is your goal and what is your outlook on this asset. Now you can slightly tweak this a little bit and make it a bit of a more hedged portfolio, because what I just went through is more of a very long bullish aspect. Like, hey, I don't care about the USD. I want to maximize my yield in Atom, because that's essentially what we were doing. Like, it will always be a positive return in Atom, but it may not be in USD. So if you were like, man, I'm not too sure, what you could do is sell some of your rewards for USDC. So you could take a little bit of a hedge, like, hey, I don't know what it's going to be, but I want to lock in some returns in USDC. I will say USDC Atom execution, especially on CAT, it's not particularly great. That's why some people do prefer D-Atom, because there are better venues that you can take those rewards to, and you have better execution on USDC. So if you were to try to take more of a hedged approach, I would probably go with D-Atom, because you could also find better you could get very cut, because essentially what you can turn this into is customized liquid staking tokens, right? So you could say, I want to take all my yield and I want to diversify 33% across the board to Atom, BTC, and USDC. And so you're saying, I'm going to spread my yield as a portfolio and make a customized liquid staking token. That's essentially what you could do. But to do that, I would go with D-Atom. You're gonna have more work, because you're gonna have to IBC and you're gonna have to find the execution for it. But with things like Eureka and some of the aggregators, it shouldn't really be that hard if you know where to go. So if you're, I would say if you're neutral to bearish and you want to take hedges, I would go D-Atom. If you're like, man, I'm full tilt to Atom all the way, man, screw a tone, let's go, you know, and I'm not saying that, I'm just making a joke because it's funny. Then, you know, maybe C-Atom, or maybe you do them in between. So those are some interesting use cases between Atom and D-Atom. And some people prefer the D-Atom due to the more venues with better execution. And let's see, do we have any other, that was that strategy, and I'm happy to, I know I've already, it's freaking Pryzm, you know, you could spend 7 hours on this. So I want to make, if there's questions or if you got something, John, or.
Yeah, I mean, that was great. I know there's so much more to talk about. We'll have to have you on again to talk about Pryzm again. I will, there's, yeah, like less than 10 minutes left, but we can skip to, before we go to Bitcoin Summer, I want to say one thing that I have done in the past using Pryzm, and I think is a really good opportunity for people that potentially see a good advantage but don't want to take on the exposure of the underlying token. And so, you know, what you can do with this is go to a credit protocol where you can borrow any of these assets where you see the discount, and then borrow that token using a collateral that you want to hold, for example, like Bitcoin or USDC, provide that as collateral, and then you could borrow Atom in this case, and then IBC that Atom over to Pryzm and buy the discounted C Atom, and then just do everything that we just saw Calabi do today, except you don't you don't have exposure to the underlying atom, so you're just benefiting off of the yield. And then, you know, when your expirations come up, you redeem, unbond fully back to atom and repay your debts. And so that's another way to like earn the yield and buy the discounted assets, even though you don't necessarily need to hold the exposure to the underlying asset. And yeah, I think that works nicely with Pryzm and money markets.
And last thing I'll say, so we can get to BTC Summer, man. Probably don't have time to go into it. It's in the slides. I have some stuff on USDY and NUSDC and NUSDT. The last two I mentioned are Neptune deposit receipts and Neptune is a money market on Injective. They are very fun, and they really do showcase why this is an interesting platform, because those yields are changing all the time. So those are fun ones to play with, but you have to be a little bit more actively managed. USDY, you can basically be taking speculations on what you think the Fed fund rate will be on certain maturities. And so you could look at, and this is, I have some of these calcs on the slides. You can say, hey, March, it's trading at an implied yield of 3%. Okay, I'll take that bet. I think it's either going to be that or less, possibly, but they could go slower. So essentially, you can use USDY to place speculative bets on what you think the yield will be in the future on USDY, while also hedging against that bet with the yield. So yeah, there's so much to go into, but I think that was a good kind of like broad scope. It definitely touched on a couple things.
Yeah, absolutely. Thank you for that rundown. I'm excited to like clip this up, and then we can make shorter videos for people to learn about Pryzm. I think this is extremely helpful. And then yeah, like segueing into Bitcoin Summer and Neutron in general, we just saw how you can use an app like Mars to borrow Atom and take advantage of the strategy that Calabi just showed us. And then also I do want to mention real quick that Max BTC is a yield-bearing Bitcoin token, and so this will be, you know, it's already live on Neutron. You can go and either mint or buy Max BTC. Currently, it's not earning yield, but in testing and currently it's live. It's live on the back end, but the users cannot access the yield right now. It's because right now it's in deposit phase. And so collecting all these deposits, there's about 6 million in deposits so far, and these will be deployed into the strategy. And you know, shortly the token itself will become auto compounding. And so what can you do with auto compounding tokens? You can deploy those into Pryzm, split them into yield and principal. And so tokens like Max BTC could synergize really well with a yield splitting protocol like Pryzm. And so definitely looking forward to if Pryzm deploys Max BTC on their platform, and we can start splitting it and speculate on the yield. And then something that Kalabi kind of touched on is that, you know, the yield itself is speculative. If someone says, oh, we're going to cut the Atom yield in half, that changes the, you know, the yield tokens for Atom, especially if the expirations are 2 years out. There's much more risk to the underlying situation for staking rewards changing. And something like Max BTC, it's not a fixed yield rate. It depends on the underlying strategy. And so it's advertised as between 5 and 10% APR. And so, you know, that's a difference of 2x in terms of yield. And so if you're splitting a token and you're speculating on the yield token, it might make sense to buy it if it's cheap. And then if the underlying yield changes, the yield token itself will change dramatically in pricing. And so there's potentially a lot of opportunities that can come up with trading the yield tokens on Max BTC. So yeah, again, excited to see that token get integrated into Pryzm. I'm sure it will happen at some point. And
yeah, that would be very cool. I'd love.
Yeah. And so I'm going to share my screen. I'll do the Bitcoin summer screen. There's a few things that have happened since last week that I want to make sure people don't miss. And then we will go and mint our Galactic Quark. So I'll switch over to my demo computer. Okay, so, oh boy. Maybe I should just use my headphones. Can you guys hear me?
Yeah, I can hear you.
Okay, cool. Okay, so here we are on Mars. You know, I was just mentioning earlier how we can borrow Atom, and so if you're not familiar with the Mars interface, this would be you would go here to borrow. You would load up your credit account, and here we can borrow Atom for 12% APR. You borrow this, and what we were seeing earlier today, you were getting like 50% APR, and so you're earning the difference between the borrow rate on Atom on your credit protocol and then what you're earning on the underlying strategy. Okay, moving on from that. This is app.neutron.org, and so this is how we can navigate to the Bitcoin Summer tab. And since last week, the total TVL is up to almost 8 million. It was over 8 million, but then, you know, some crazy volatility on the Bitcoin token dropped the total TVL to just below 8 million. So that's great to see the TVL going up every week. A majority of this TVL was seen by a large minter of Max BTC. So you can see here the just mints for Max BTC is up to 8.6 million. And so these people will be earning the 5 to 10% APR that we were talked about for just holding the underlying token once it goes live. And in addition to the underlying yield of Max BTC, there is Neutron rewards from the Bitcoin Summer campaign going to this token. Right now, it's 11% APR. As more and more deposits come into the campaign, this APR will go down. But since there's already 8 million in deposits, you know, you can it would take another 8 million in deposits for this to then go down to 5% APR. So in total, 5% APR from the Bitcoin Summer rewards plus 5 to 10% APR on the underlying strategy. That's really attractive for holding just pure Bitcoin exposure, assuming you're okay with the exposure to the structured protocol. If you're not familiar with, you know, how Max BTC actually earns its yield, there is a Medium article by Structured, and it explains the whole underlying strategy because it's always very important to know where is the yield coming from. So another update that has been added to the Bitcoin Summer campaign, I think from last week, was now these Astroport pools are earning Bitcoin Summer rewards. I know this was something that was a little confusing when we launched initially, like a month ago. These Astroport pools were not earning the rewards, but now they're earning the Bitcoin Summer rewards in the rewards from the campaign, and then also some of them still have some remaining Astro incentives. If people are voting on those pools through the Astro Wars, remember if you're staking Astro, you get to vote to allocate the different Astro rewards to the different pools. And then in addition, some even have neutron incentives. For example, this one, you can see the second line under pool APR. There's neutron incentives, so this is liquid incentives that you can go and claim directly from the Astroport UI, and then also the Bitcoin Summer rewards, which is down below, the 58% APR on this specific pool. So one thing again, and there's one more pool I wanted to talk about, which is this one here, Mars. And so this is if you lend. This is a brand new position on Bitcoin Summer. If you are lending wrapped BTC on Mars, you can earn 23% APY right now. And with that lent wrapped Bitcoin, you can go and borrow whatever you want. So this is incentivizing lending supply so that people can later borrow wrapped BTC from Mars. And let's say you don't want Bitcoin exposure, you could put USDC as your collateral on Mars, borrow wrapped Bitcoin, and then use that wrapped Bitcoin in the campaign. And so there's a lot of different moving pieces, a lot of different opportunities for people that want exposure to different assets. Remember, like, that is step number one. You have to pick which asset do you actually want exposure to, and then find what can you do with that asset in order to maximize the yield that you're earning on it. And so those were kind of the big updates with Bitcoin Summer and the different positions that might interest people. I do want to always just remind people about how the rewards actually work for Bitcoin Summer. And so you'll see here rewards are earned in the reward column every day at 6:30 p.m. UTC. This will be updated, but you cannot claim these rewards until the phase ends. So every phase is 2 months long, and the rewards will become claimable after the end of the phase. And so at the end of the phase, so right now it's about in 1 month from now, you'll be able to claim these dollar rewards. But as soon as the phase ends, the amount that you claim, so this dollar amount, will be converted into the neutron tokens, and you have 3 options for claiming. One, you can claim 100% of your tokens, but they will be vested over the next 2 months. So let's say it ended right now. I'll have 10 cents worth of neutron vesting over the next 2 months, and every day I can claim a bit more. So it's linearly vested over 2 months. Option 2, claim 50% of your rewards right now. So the phase ends, and I would be able to claim 10 cents of neutron right now, and then you can do whatever you want with that, with your claimed rewards. The third option is to claim 100%, but stake and lock. And so there's a mechanism where you can boost your rewards in Bitcoin Summer right here by staking and locking neutron for anywhere from 1 month up to 4 years. The longer you stake it, the higher your boost on your Bitcoin Summer rewards are. And so that's the third option. I could claim and lock the full 10 cents of rewards in neutron up to 4 years, and then immediately start benefiting from the bonus multiplier on the remainder of my Bitcoin Summer positions for the phases to come. Because remember, this is not just a 2-month campaign. This is going for a minimum of 12 months. So a minimum of 6 phases, and every phase the rewards will be increasing. And so this is to start small, bootstrap the entire Bitcoin DeFi ecosystem, and then as it grows and grows, attract more and more TVL. As more people enter the strategy, more people hear about the campaign, and more people are see it. People need to see it to believe it. And so it's not just this campaign is not just about the neutron rewards that are on top. It's also about the yields coming from DeFi. And so that's what makes it sustainable, what makes it long-term, and what makes it scalable. And so it doesn't make sense to just be throwing incentives at something that are temporary and that it's not sustainable. And apps and protocols do this to bootstrap their networks. but it's just for bootstrapping, and that's the only way that makes sense. In order for it to become long term and sustainable, the yields need to be coming from DeFi activity on the chain. And so how this works in general for Bitcoin Summer is the max BTC that we talked about is a yield bearing token, and then people can leverage loop this token on Amber. And so Amber is a protocol that allows you to deposit max BTC and borrow against it in Wrap BTC or any of the other partner token Bitcoins like Uni BTC, Solve BTC, or eBTC. And then with that as collateral, you buy more max BTC and then use that as collateral and you loop it. It all happens in the background. You pick your leverage and you just deposit max BTC. And so what you're doing is you're earning, just like we were talking about previously in the borrowing Atom and putting it into Pryzm, and you earn the difference on the borrow rate and what you earn from the strategy. The same thing here. You're borrowing you're borrowing the Bitcoin token and you're earning the max BTC yield. And so when you loop that up to 12 times, you're earning that difference multiplied by 12. And so this is potentially like the best place to earn yield on single deposit Bitcoin. But what's happening in the background is there are swaps going on. So there are swaps between max BTC, the partner tokens, and so those swap fees go to the LP providers on the network. And then also, people need to be lending their Bitcoin in order for these leverage loopers to be borrowing and swapping. So now if you're lending your Bitcoin, you're going to be earning yields on just lending. And so those are the three pieces of the puzzle, and those are the three necessary pieces of the puzzle that will allow this entire ecosystem to flourish on DeFi yields alone. Even with no neutron incentives for Bitcoin Summer, if there's something like lend Bitcoin for 5% APR, that's massive. Like, where else can you get 5% APR from just lending? On Aave, Morpho, you're getting like 0.5% for lending Bitcoin. And so that's how this ecosystem is being bootstrapped for long-term sustainability and scalability. It doesn't make sense if it's just like 1 million can be scaled into this. Max BTC as a strategy is scalable into the hundreds of millions, I think even 1 billion. And so that means that this entire ecosystem can scale with it up to the hundreds of millions and billions. And so that's kind of an idea of Bitcoin Summer in general and how to participate in it. Here you go, app.neutron.org, and look at the different opportunities. There's a lot of different opportunities based on what people's risk tolerance is and what they want exposure to. And so if you, definitely look into the documents, read about the different protocols and how they operate, and then also, of course, join the Neutron Telegram or the Neutron Discord, ask questions. There's plenty of people there that have been thinking about this for a long time and are happy to answer your questions. So, Kalabi, I don't know if you have any questions about what I was just saying. I can help clarify, or we can go.
I mean, you're a good salesman. I'm like Ophir down because we deploy our treasury. We try to put caps on like how much we want any one asset deployed. We try to keep it 50% or below, depending on the asset, specifically even for WBTC. And we've been pretty conservative as it's a core part of our portfolio. We typically try to go for single-sided because if we did anything to like USDC or some other asset, you'd probably be a small allocation, but that's usually offset by the APYs you can usually get for that. But with like max BTC and these looping and these single-sided strategies, it's definitely a pretty compelling reason to bring some underutilized assets, because I think our utilization on BTC is like 13%. So we still have like a good chunk that we could deploy somewhere, because we're really looking to diversify yield streams, because right now we're kind of like our allocation of yield streams is like predominantly on one platform more than another, and we want to make sure that with anything like within crypto, we want to make sure we have like diversified yield streams, so we're not just totally dependent on one stream. And then also the idea with like vaults and stuff that we could play around with that, and we could showcase take our collective knowledge and build vaults on it. Yeah, no, I think you did a good job of laying it out, how to choose the asset, where the yield comes from, and then what happens or what your options are when you claim. And I think all those with vesting and everything, to me, that all makes sense, because you want to incentivize the people deploy your BTC Kalabi. Lewin, I think we're definitely considering it, my friend. John over here, he's a good salesman.
I
No, I
don't
don't
want,
think I have any questions.
I don't want to be a salesman. I mean,
Not a
I want
salesman,
to.
sorry. I don't mean it like that.
No,
But
no,
no,
no.
you explain it very well, and you make a compelling case for like the deployment of funds there. And then also just a trusted, yeah, I think it's something that's pretty useful in this system of like trustless systems is like people you trust. Like trust is still a valuable commodity, and people like John and Lewin in here and a couple of these other guys, we don't necessarily have met each other, but I think there's an inherent level of trust. And I think that's, well, if he says like, hey, I'm putting my name on this, like, I trust these guys. I know how it works. Like it's that trust alongside with the information makes it something that we want to consider at Ophir DAO.
Yeah, I mean, I run a managed vault on Mars, and I have a good chunk of my deposits in there because I'm running the strategy for myself. Like I'm a yield farmer myself, and so of course I want to be farming with my own capital. And the same thing in Bitcoin Summer. Like 90% of my portfolio is locked in Bitcoin Summer, and so I can't even take advantage of these ARBs that I see because they're soft locked in the campaign. You can withdraw your assets at any time. This is something I also should have mentioned. You can withdraw your assets from the Bitcoin Summer campaign at any time, but you will have forfeited the rewards you accrued up until that point in the phase. And so if you want to claim these rewards, they need to be in in the same positions up until the phase ends. And so that's why I say that, I don't have much liquid right now because I'm waiting for the phase to end, and then maybe I can, capture some ARBs and then jump back into the campaign. Are you muted?
Sorry. Is Hydro deploying any liquidity here? Is like Neutron gone up for any grants on Hydro?
I know Mars it has been and is bidding for Atom liquidity to be lent on Mars. I think there are some other bids too that might be going into Supervault or Astro. Drop usually bids every month on D Atom so they can get liquidity for D Atom. I don't know if what the other Hydro deployments are. I know you can only bid for USDC, Atom, and now Neutron. Now there's a Neutron bucket in Hydro, but I think they hold other assets. But I don't know if you can bid on those.
Yeah, I don't know if Neutron would ever be into it, but to have like a DAO-based campaign, to have like DAOs come in and like compete for some kind of like achievement, that'd be kind of cool.
Is Ophir DAO gonna bid for? I mean, I'm assuming DAOs can bid.
We are still kind of like in our final stages of migration because we're still deciding on a home, and John here has kind of like talked about like some of the aspects of Neutron and like getting us familiarized with it. Currently, we're on the hub, and it's a double wrap token, and we're just kind of there while we kind of like assess all the options. And right now, there's definitely a couple of like places that we're looking at. And even when I say choose a home, at the end of the day, like we want to go play DeFi on wherever the chains are and wherever the opportunities are, and they make sense, and there's good community. We want to go there. In terms of home, it's more like where do we want to be deployed in terms of DAO. But at the end of the day, we're a cross-chain treasury fund. That's what we want to do. Yeah. I think reaching out to all these different communities and the less tribalism we can have and more of like showcasing of what we can do across all these different venues within the cosmos will do us a whole heck of a lot of good in the long run. So it sounds like overall, like the Neutron team is very neutral and just like, hey, look, we just want to have fun and make cool stuff and, have people come play, which I'm all about that.
Right on. Yep. Well, we're a bit now over the hour, so let's mint our Galactic Quark, and then we can raffle that off to someone in the audience. We'll do that after the show because it takes a bit to collect who made some comments. So here is a Super Bowl. Let's collect our daily charge. These are like points on the platform. We're gonna go ahead and mint a Galactic Quark. Scroll down here, mint for 160 NTRN. Let's see if we have that in our wallet. Okay, we do.
If Lewin gets it, he has to give it back. Just kidding. Just
So on
kidding.
Super Bowl, as always, we have to reveal in 2 separate transactions. This is to prevent botting on the platform. Okay, here we go. Actually, I haven't seen this headset, I don't think, ever.
Pretty cool.
Head transponder for is a rarity of 1.5%. So yeah, that is pretty good. Okay, so here it is. So we will look at the Twitter comments and look at the comments on YouTube, and we'll see someone who has asked questions, and we'll raffle it off. And so thanks everyone for coming on our first ever hosted by YieldLab Livestream, and thank you Kalabe for demoing Pryzm for us. It's been a pleasure having you on the show. And thanks everyone in the audience for coming on our different platforms. So, Kalabi, do you have anything to say as a closing statement?
I just appreciate y'all's time coming in here and educating ourselves, staying on top of like this ever-changing landscape. And John, Yield Labs, thank you for having us on. I know it's not the inaugural, but inaugural as Yield Lab. Thank you for having us on. Maybe later down the road we could do another one on Pryzm, maybe something more specific. And yeah, thank you all so much, and y'all just enjoy the rest of your day.
Cool. Thank you. You too. Have a great one, guys.